Good morning. It is Monday, October 19th. Welcome to Savannah Community Headlines Live, a weekly gathering around the virtual water cooler. I'm your host, Marjorie Young, and today is all about health insurance. One full hour of Q&A. Already on Monday, October 19th. Welcome to Savannah Community Headlines. Catalina Garcia Quick is on our visibility team and a business owner. Michael Siegel is the current chair of Savannah SCORE. So if you would like to ask a question or have any information that could help our viewers, please join us online with the link below. So with that, good morning, everybody. How are you? Hey, Bill. Hey, Michael. Hey, Catalina.
Good morning. Good morning, everyone.
Bill, this is such a hot topic. I know we're at a stage right now where we need to be, if you're on the marketplace, now's the time to be re-upping, right?
Well, the marketplace for individual policies opens November 1st.
Okay.
Medicare opened on October 15th. So you got to remember 100% of all individual policies in the United States renew on the same doggone day. 100% of all senior citizens renew on the same day, and 72% of all groups renew between December 1st or January 1st. And so they've built this little problem that everybody's renewing theoretically now.
Well, here's a headline that we found in the paper this week. How on earth are people going to afford health insurance? I mean, are there any plans out there that people can actually afford?
Well, and that's the problem. When you look at affordability, it's so different for each person that you're asking the question to. If I work for a large company, let's say Gulfstream is not only helping pay for the employee, they're helping pay for the spouse and they're helping pay for the children. If you're buying an individual policy and you qualify for a subsidy and you can maneuver through the rules and regulations, which I think are 21,000 pages of rules and regulations, if you can go through that and come out ahead, you can usually afford your health insurance if you fit into the right category. Everybody else who works for a small employer who can only afford to pay a small portion of your insurance, or if you work for a small employer who doesn't offer insurance, or if you don't qualify for a subsidy, which millions of people do not, it's getting harder and harder every year. I've been doing this for 35 years. One of the first groups I wrote on Waters Avenue, their single rate was $47 and their family rate was $157 a month. And now it's not unusual to see a $2,000 a month family and a $700 a month single person.
Michael.
Yes, ma'am.
Hold on a second. Let me get us all back on here. I can't get us all back on here. There we go. Okay, so Bill, what advice do you have about getting insurance? I mean, I know everybody's different.
There's so many different factors that you have to start out talking to someone who knows the answers.
Well, let's take a case study. Okay, a lot of people watching this have their own businesses. I mean, Michael, you used to be a business owner. Catalina, you're a business owner. And let's say it's just an individual. Like, how would I go about getting health insurance?
Okay, so group insurance in Georgia can go down to one person. So let's first distinguish the difference between group and individual. Okay. All right. Individual coverage in Savannah, you end up with basically two companies, CareSource and a company called Ambetter. These are companies we never heard of years ago. When the Affordable Care Act first came out, I had 3,000 square feet at Savannah Mall. I had a location at Oglethorpe Mall. I had a location in Richmond Hill and Dublin, Georgia, and a partnership in Macon. And it's because all of the providers were in it. You could get Blue Cross, you could get United Healthcare, you could get Humana, you could get Coventry. And it didn't take long for that thing to completely fall apart. And it fell apart because of the way some of this stuff was working. And I always look at this politically because it's absolutely wrong to look at it that way. So I start there and show you why it doesn't work politically. You take a Democrat who thinks the best thing in the world was Obamacare, and then they have a problem with the rules and regulations that they get no help at all, and they can't believe that this is built this way. You take a Republican who says, golly, I would never have Obamacare, and you show them in their case where the subsidies might help them, and it's completely different. It has nothing to do with what your politics are. It has nothing to do sometimes with your income. It's exactly based on the rules and regulations. So let's go back to group versus individual. Group insurance is going to usually give you choices. It's going to usually give you freedom. For example, if you had Ambetter today, which is the #1 plan sold in Georgia, then you could not, 95% of the doctors don't take it. Normally, you can't use it outside the state. You can only use it for the doctors that are taking it. A lot of hospitals don't take it. Now, we're lucky in Savannah that all 3 hospitals in Savannah take the Ambetter plan. And we're lucky in Savannah that we have quite a few doctors who do this. But if you were in some rural counties or up in Baldwin County, or if you're over in Bullock County, you're going to find out that very few doctors take these plans, and people run into that particular problem. With group, you can still buy United Healthcare, Humana, Aetna, anybody that anybody that you need, you can still buy in the group side. So that gives me the freedom, hypothetically, to go to Mayo or Cancer Treatment Centers of America or Sloan Kettering or Keep My Doctor. Mm-hmm. And so you have to first go through those 2 steps. All right. Now let's take the single person. We'll pretend it's a single person. It's a business owner. They are able to play somewhat with their adjusted gross income. A single person making less than $46,000 a year, the government gives them a subsidy. That's only if they make more than $12,800 a year. So if I'm a business owner and I'm losing money, and so my net income is 0, and I'm 60 years old like I am, my premium's $1,000 a month. Uh-huh. But if I can use my adjusted gross income and my expenses, and I can make it where I only make $15,000 taxable income, then my premiums are 0, and my deductible is 0, and my copay to see a doctor is 0. And so that's the difference. It's $1,000 a month is what the real premium is, but if you fall into the subsidies, you might be able to get it for less. And 2 things happen when you fall into subsidies. One is the government helps you pay a premium. We look at that as, golly, somebody's helping me pay the premium. I'm getting a subsidy. The other thing is cost sharing. If you're going to qualify for free health insurance or reduced cost health insurance, what good is a $6,000 deductible if you can't afford to pay the premium? So then a thing kicks in called cost sharing that actually makes your plan better than the actual plan that it was for other people. And so the problem with the individual market is all of the reasons why you might not qualify for a subsidy. A, I'm married, and I'm not offered group insurance at work, but my spouse is, and my spouse can add me for $800 a month, which we can't afford, but just because she's offered health insurance for me to be added, then I don't qualify for a subsidy. Or my wife and I don't file the same tax return. Well, that means neither one of us can get a subsidy. My wife makes a good income, I do not. That still hurts me from maybe getting a subsidy. And one of the things this is built on is not the taxes, not the income that I'm making today. If I was signing up today, hypothetically November 1st for 2021, I'm estimating what my income is going to be on my April 15th taxes in 2022. Oof. All right, so we all know it's already wrong. Everybody's incorrect. And so 2 things occur. I give you an estimated income, so I don't qualify for a subsidy at all, or I give you an estimated income that I do qualify for a subsidy that theoretically I could owe back April 15th of 2022. I've had this happen in the past where a couple, they were over 59, so they were in their 60s. They had large subsidies because their adjusted gross income was extremely low. Nobody thought about the problem of cashing money out of a retirement to remodel the kitchen. So they took $25,000 out of remodeling, out of their 401k, out of their IRA. They were over 59 and a half. They remodeled the kitchen and they ended up owing $26,000 back on the subsidy for their health insurance because their income went over the threshold that they were allowed to make. And there's millions of people who have gone to find on their tax return that all of their tax return was sucked back because they didn't qualify for a subsidy that they got. Another problem with the individual market is I'm going along, my premium's $17 a month. Golly, I'm just the happiest person in the world. My deductible's okay, my premiums are nothing. And then all of a sudden I look in my checking account and they've taken out $700. And it's because they sent me a notice, and I mean, I get so much mail and I can't read, I can't make out every one. And what they did was they had sent you a questionnaire, and if you didn't complete it and get it back to them in time, then they stopped the subsidy and sucked the regular premium out of your account. Take someone who can't hardly afford anything, move their insurance premiums to $700 a month when maybe they're used to make $39. And assume that money was scheduled to be going somewhere else. And they wake up and it's gone and it's not coming back. And if it does, it's not coming back anytime soon. And so a house payment doesn't get made, or a car payment doesn't get made, or something else is not done. We have thousands of individual health insurance customers here, and we tell them, if you get a letter, call us, send it to us. Do not ignore it. Because ignoring it is like your teeth. You ignore your teeth, they're going to go away, but it's going to be painful. I mean, you don't do what needs to be done on these individual policies, it's going to be painful. So, you know, what else is there? All right, so there's group health insurance. My employer helps me pay for it. There's individual policies that I either pay all of it or I pay a portion. And then there's a lot of other things out there. Blue Cross Blue Shield is coming out with a brand new individual policy effective January 2nd of 2021, and it will ask medical questions. Now everybody's up in arms because everybody's saying, oh, it's not going to cover pre-existing conditions. It is going to cover pre-existing conditions. It's the only thing is they're going to charge you more if you're sick. They're going to charge you more if you have medical conditions or medical problems. And so this will be a place that some people can go. There's also the religious-based plans. If people heard of MediShare or Liberty Share, these are the sharing ministry plans. There's about 5 or 6 different ones of those, and there's probably 1 million people in the United States participating in that.
Bill, excuse me. Yes. So the difference between like a Blue Cross plan and a MediShare plan, it's substantial, but people need to understand there's also substantial differences. So like,
well, yes and no, because Blue Cross Blue Shield in Atlanta on the individual policies is worse than Ambetter because it has fewer doctors than Ambetter. So
how much would that be? Just hypothetically.
As far as a premium?
Yep.
The average premium on these are probably $600 a month per person.
Let's say if you're over 60.
$1,000. Okay. And so what happens? Let's go to Atlanta where we have more competition. Let's just say, and let's say Blue Cross Blue Shield is there. What you'll notice is almost no one else is there, because what happened in Blue Cross Blue Shield was left here in Savannah, and Blue Cross and Blue Shield were side by side. And Ambetter was 30% cheaper than Blue Cross Blue Shield. What happened? All of the well people went to Ambetter because they said, I'm not using insurance anyway. I want the cheapest doggone thing I can get. And all of the sick people went to Blue Cross Blue Shield because of the name. So Blue Cross Blue Shield had to pull out because the competition wasn't fair. They said, we can't take all of the sick people and let someone else take all of the well people. And so then all the competition started pulling out left and right.
Okay, so how much is the MetaShare and what is that exactly? Because I know I investigated that too, and it was interesting, but I decided not to do it.
So let's go over just the individual one more second. When we see a Blue Cross Blue Shield policy on the exchange or through healthcare.gov, it's not the typical Blue Cross Blue Shield policy that you can get in group.
Okay.
See, this is a huge deal. All of the plans on healthcare.gov have limited what I call anorexic networks. When you think about this, you say, well, I have United Healthcare. United Healthcare has 8 different networks of doctors. So even though you've got United Healthcare, and even though that doctor or hospital takes United Healthcare, it might not take your plan. Same with Blue Cross, same with United Healthcare, same with Humana.
Bill, and also just thinking out loud, can I use it if I travel to South Carolina? Yeah, better. I thought it's just Georgia.
Well, it's going to change in January, but let's take today. Today, you have no coverage outside of the state. So if I bought this and lived and wanted, if I bought it in Aiken, South Carolina, I couldn't use the plans in South Carolina. I couldn't come into, Augusta, all of these things that you can't do. I couldn't buy a plan in Hardyville and use these Savannah doctors. And so all of these are complicating things. Now, Ambetter is going to start letting you use any Ambetter doctor anywhere.
Oh, good.
In different states. And so if you looked at healthcare.gov, and this is what I read the other day, 1 out of every 5 people are covered by Ambetter. This is just on healthcare.gov. They've grown from nothing to that.
Yeah,
and they've done it by basically starving out the doctors and the hospitals being the only network that you can pick. And basically they're saying you can either, have us cover your part of your bill or have none of your bill covered. And so they have a reimbursement amount that most doctors and most hospitals can't survive off, but they take it because they want some reimbursement from an insurance company. Now, let's go to the other. So again, we have individual health insurance, we have group health insurance. You can buy a MetaShare or Liberty Share. There's about 5 different ones that are religious based. Some are a little bit more complicated than others. Some use insurance company networks, and they're usually less than half the cost of health insurance. Let's take MetaShare as just an example. They don't cover wellness. So you would pay wellness out of pocket, but if you're saving half the premium, that leaves a lot of room to pay for your wellness. They don't cover prescription maintenance drugs. So if you have those, you could have a situation there. They don't cover pre-existing conditions until after you've had them for 36 months. Some people buy temporary policies. I'm going to buy a temporary health insurance policy that's good for the next 3 months. Theoretically, those were used for in-between jobs. But now you can buy those for, in some cases, for years, that you sign up now and you're able to renew it for years. And those start from $100 a month, hypothetically, to $800 a month, depending on what benefits you want.
Bill, I got a question about the MetaShare. So let's say you've been on MetaShare 2 or 3 years and somebody gets sick. What happens?
In the best case scenario, which I've seen, the best case scenario, somebody unfortunately gets extremely sick. MetaShare has been known to jump in, call the doctors, call the hospitals, let them know this is who's paying this bill, keep us informed. If you read just the basic way it's supposed to work is you pick a family cost sharing amount, and they use terms like cost sharing in the sense because they can't say deductible. It's not insurance. It's not legally insurance. And so what they're doing is using other terms, but in the big picture, you pick a cost sharing amount of $5,000 rough math, and that's for you and everyone in your family. Then as soon as you're in the hospital, you're going to pay the first $5,000, and then that's it until your renewal, because your deductible or your cost sharing amounts start over the month you buy it. So if I buy it in June, it starts over every June. It's not like normal health insurance. It starts every January.
Sorry, I got knocked off the internet, so I missed that too.
So they seem to do a really good job. Some of these plans tend to do a very good job when people get real sick. but they're not full-blown health insurance policies.
But Bill, don't they vote on? Don't all the members have to vote on you to cover this illness or not?
Well, I think that they have something like that, but that's for if they're going to help people with a pre-existing condition. It's not for the general coverage.
Okay.
It's like, do we want to pay extra to help Michael pay a bill that we would not normally pay? I think they have a program in their system for that. In other words, Michael buys it, he can't afford regular health insurance. He ends up having a pre-existing condition, of course, that he knew about going in. And he said, well, hopefully I won't have an expense for the first 3 years on this particular thing. Something happens and he's got a problem. I believe you're able to go in and ask for help. And that's, I believe, what the members vote on to see, can we do a special fundraiser to help Michael with his pre-existing condition?
Yeah, it's a very, very different model. And it's attractive because it's substantially less money. Michael, you are the president of SCORE here in Savannah, and you work with hundreds of small business owners. What are you hearing from them, and how are they affording health insurance? What are they doing? Oh, you're on mute.
There we go. I don't have a lot of insights into a lot of specific instances, Marjorie, but all I can tell you is that health insurance coverage is one of the hugest problems for small business. All the things that Bill is talking about, with how out of reach the costs are, especially in a startup. You know, when you're trying to, you have to designate every penny at the start in order to try to achieve financial viability. That's why a lot of times the folks that are actually starting their business as a side hustle and are keeping their day job, if you will, where they do have coverages. That's one thing that people try to do. But I think a lot of folks these days are going without and are keeping their fingers crossed that they won't encounter any kind of catastrophic health thing, which, you know, that's really dangerous to take that kind of risk. But the reality is there's only so much money. And I'm not aware of any kind of solution where small businesses can pool together. Bill, maybe you are. Any kind of special thing for small businesses where they can combine their spend and try to negotiate better rates as a buying consortium. I don't know if there's anything like that.
You were going to say something?
I was going to say that's exactly what I was going to ask about, because, you know, I can give an example. I have worked with a very small nonprofit here in town where we only had, most of our workforce was volunteer. We only had about 3 staff, and to purchase insurance for 3 people as a business, you know, even though we're a nonprofit, you're still a business. It was really, really expensive. And so for the nonprofit sector, those smaller nonprofits or those small businesses with only 1 or 2 people, you know, it costs, it doesn't, you're not, what's the word I'm looking for? You're not competitive in the workforce, so to speak, because, you know, like I was able to work there because my husband has good insurance, because they didn't offer me insurance for my package. And so what we did as a group, you know, there's a number of affiliates. There's like 27 affiliates of this one nonprofit in the state of Georgia. And so what we did was we actually went to a big, I think it was TRICARE that we went to, and we went, hey, what if we make a group of all 27 of us? Would you sell to us at a better rate than you would if one of us came to you? And they wouldn't do that for us at the time. And that's been a long-standing question for me, like, why is it possible, or are there things available? Like maybe the chamber could bring insurance group, or, you know, like explain how that kind of stuff works. And if there are, I mean, I know that there are some things out there, but I'd like for you to maybe explain maybe some of those options for your small business, if there's like a consortium approach or otherwise.
I do know that the Georgia Chamber of Commerce has it. They have a program like that, but you have to have 2 employees.
Mm-hmm.
So,
All right. So the chamber, the Blue Cross Blue Shield came in with 2 things recently. They're both called captives, and you think of association plans as what you had brought up. And a captive is similar to an association plan, except that it renews all at the same time. So picture that Bill Lucas Insurance is a captive, and I say, hey, Marjorie, you can just get on my health insurance plan, and you jumped today from yours to mine. You're going to renew when I renew. So you're not going to have that annual renewal. Say if you renewed in July, you're going to renew every July. It's going to be when that captive renews. So their 2 captives are, one is through the Chamber of Commerce. You have to have less than 50 employees, and you have to insure at least 2 or more. Okay. And then you've got the Farm Bureau Insurance Company, where Blue Cross Blue Shield has installed another captive with them. And that particular captive can go down to 1 person.
how much is that?
It's going to be based on your health. So those 2 plans are looking at your medical history.
Mm-hmm.
All right. Because the rules on the Affordable Care Act says if you have less than 50 employees, 50 full-time equivalent employees, you can have a thing called what's called community rates. Community rates are what we basically pull off the shelf. They're based on age, not sex. And those are the rates that everyone can have with Blue Cross Blue Shield or Humana or United Healthcare. So if I've got a plan with United Healthcare and my next door neighbor has the exact same plan at their company with United Healthcare, and I have $1 million claim and they have no claims, we're getting the same rate increase. That was the purpose of the Affordable Care Act, to basically spread the risk, make everything as equal as possible. By doing that, it, in some cases, made the plans higher. In some cases, it made the plans lower. But either way, we're having this growing amount. So competition is out. And so there's some plans that were out even before the Affordable Care Act that are called level funded plans. Okay? They've been in Chicago, or they've been in different cities or different states where they had community rates, and the community rates keep going up and up and up and up and up and up. And so they brought in these plans. Well, these plans were around again before the Affordable Care Act, and they skirt the rules of the Affordable Care Act, or some of the rules. They have to cover all pre-existing conditions, but they can look at your medical history. So if I've got 2 or more employees, should I go jump on the chamber plan? Maybe. But they have rules and regulations that you have to pay if you're the employer. Michael's the employer. He's got to pay a certain percentage of his employees. He's got to have a certain percentage say yes. You couldn't go and do a group insurance. Hello, Diane. You couldn't go and do a group insurance plan with 50 people and only cover 2 because only 2 of them want it. So you have all these rules and regulations of what you've got to do. The chamber plan basically looks at almost any group. The Farm Bureau plan looks at people with SIC codes. SIC codes are basically what type of industry are you in. And if you're in the farming industry is what they were trying to do, then you could qualify for those plans. And they're the most liberal that will allow a subcontractor to have a 1-person group to cover her, who owns that particular company, and her husband and her entire family.
So what's the price? What would the price be on that if you're a subcontractor or sole?
It's going to be based on your medical. So if we took the $1,000 rate for me, hypothetically, because I'm 60 years old, it could be less expensive. It could be more expensive. The advantage that they've got is they're able to look at your medical history if there's 5 members or more covered without bothering you to fill out a medical questionnaire. Think of all the information's on the internet. These companies can go on there, Marjorie, and basically pull up every prescription you've had in the last 12 months, look and figure what they think those prescriptions are used for, and give you a price based on that. If you have fewer than that many people covered, then we've got to answer medical questions. Then we send the medical questions to them. If you want to do the exact same thing they're doing, it's called a level funded plan. And there's multiple companies who will do that. And they basically break your bill up, and you only see it as Marjorie's $650. That's all you see. That bill actually has 3 sections. It's got the administrator cost, it's got the insurance that kicks in after a certain amount, and then it's got a claims fund that they're basically building a claims fund to pay your claims out of. And if you don't use all your claims funds, some of these companies give that money back to you, the employer or the employees. It brings in more rules, it brings in more regulations, so it's a little bit harder. And what the insurance companies have done to ruin small group and make sure that no one has any help for small group, let's say that we're all here. There's 5 of us on the screen. You know, there's me, there's Michael, there's Diane, there's Caitlin, and Marjorie. We're all sitting here, and we say, let's do a group insurance plan. It turns out we want to use Diane's doctor. That's real important for her. And so we want to go with United Healthcare. And 2 of us don't need it because we're covered by our spouses. So we end up with a 3-person group. United Healthcare pays me $5 in commission. Michael's premium could be $1,000 a month. My commission is maxed to $5. Now, I've got to get all this information from this group. I've got to take all of this and give it to United Healthcare, to Blue Cross Blue Shield, to the chamber plans, to the farm plans, to the level funded plans. I theoretically maybe need to grab medical from everybody. Again, we find out 2 people don't need it because, golly, the price is still too high. I'm going to stay on my spouse's plan. It gets down to a 3-person group, and I make $15. And I've got 7 hours invested by the time we enroll this, because I've got employee benefit booklets. I've got to get Marjorie's forms filled out saying she didn't want it to prove she was offered it, to be able to protect the HR situation. And so they are trying their damnedest to make sure no agents write this by reducing the commissions so no one would want to. I've wrote 35 new groups in the last 2 years. What I call new groups is virgin groups, kind of like Michael was talking about, and things like that. There are ways to do group insurance. It's usually to benefit the owner, or we really got to figure out a way to give something to an employee to make them stay, to help them. And it goes back, benefits to me are really simple. I love what I do. I've been doing this for 35 years. And the answer is, if I gave you an 8 cents an hour raise, what would you say behind my back when I walked out of your office? And it wouldn't be very nice. But if I gave you a benefit like group life insurance, or I gave you a benefit like dental, and I, the employer, paid a portion of it, that cost to me could be as low as 8 cents an hour. And so you put together benefits that attract employees. And of course, the elephant in the room is the health insurance. Oh my gosh, it's a lot of money. And so you look at creative ways. For example, maybe you help people get subsidies through the Affordable Care Act for the people you're not going to offer coverage through. We have employers. I have employers, and I'm just going to name a few names so you just know, like Paula Deen or Portland's Music or Olympia Cafe or a dozen heat and air companies. And so I do the group insurance for over 200 local companies. And I've been their agents for years and years and years. And so education is the key. But when you look at these things, it's sometimes if I offer health insurance to Diane, in other words, Diane works for me and I offer her health insurance, and she was getting a large subsidy through healthcare.gov, she's now lost that subsidy. So by offering her health insurance, I could have hurt her.
Gosh, Bill, it's so complicated for small business owners. Think about, especially right now with COVID, everybody's losing their job, which means they're losing their health insurance. They're actually starting businesses. SCORE is helping them get started and trying to navigate this healthcare system. I mean, it should, in my opinion, it should be easier. I mean, small businesses are the backbone of our community. If we have a strong small business community making money, we need to make this easier for small businesses. And this is not easy.
I don't know how you make this easier. What we do is a Virgin group calls me, Betty calls me and she goes, "Hey, I'm opening up this new place and I've got employees and I need health insurance." And the first thing we're like is, okay, tell us what you want to do. Tell us what what you think you want. And a lot of times they have no idea. They have no idea what it's going to cost. They have no idea what's going to be offered. And I say, and really, you're going to be less than 10 employees. Yeah, I believe I'm going to be less than 10 employees, which means to us, we're not going to make any money. Okay. So we go in and we tell them that. We say, okay, so here's our choices. We will bring you in and treat you like Paula Deen, put you down. We will make sure you have all the time you need to decide everything. And we're going to show you every option out there, from the religious plans to the subsidies to the group plan. We're going to dissect your group and we charge you like an attorney or an accountant, period.
So Bill, we got a question here from
Yes,
Julie. Can you read the question? Are you
familiar with Shared Healthcare Alliance? They seem to be cost sharing. I don't know them. That is share. Cost sharing plan. I don't know that particular one personally. There's a person in my office, Garrett, who does more on the individual side where I do more of the group than anything else. If he was in here, he would know that right off the bat. So if you, send me an email and ask me that, I will make sure you've got the answer to that by, 15, 20 minutes after this is over. Some of these plans have gotten to be so complicated that we have people who specialize in different sections. I do group insurance. I know all the other stuff. I know the Medicare. I know the individual market. We're in the top, we have the largest individual share market inside, out, as far as Georgia, outside the Atlanta area. So we've got thousands of individual customers. But I'll tell you, I know the rules, I know the regulations, but I've got people who specialize in the nitty gritty on some of these things.
Diana,
We lost her for a second, I think.
you can get back on. I would love her insight, and just because she's been doing this for many years.
Can I ask a question about a different subject that might be helpful, Bill?
Yes, please.
Would it be appropriate for us to, at least for a moment, to address health savings accounts? I know that when I was in the workplace, I had several of my employers who did offer the HSAs, and those were great programs because of the tax advantages, et cetera. Would it be helpful for you to explain to folks what that is and how that might be helpful to them?
Absolutely. So every health insurance company out there offers HSAs as an option. In other words, you can either have the copays or you can have the HSA options. I would say 90% of all of my business owners have HSAs. And the reason they've got the HSAs is because they're looking at true risk. They're looking at, if I buy a $6,000 deductible that theoretically nothing's covered till my deductible's met, what I've got is an umbrella policy. And the advantage of having an umbrella policy is I know what my cap is if something happens to me or anyone in my family. The other advantage, go ahead.
What is an HSA?
It's a health savings account. It's a medical IRA. Okay. And so it really is two separate things. One is an insurance policy that basically has no coverage for anything except for wellness until your deductible's met. So all the bells and whistles are taken off. There's your basic policy. Nothing's covered until you meet your deductible. Let's just pretend the deductible's $6,000. And as soon as you hit that, we'll pay 100% of the rest of the bills for the rest of your calendar year.
And what I learned about HSAs is like, so if it's a $6,000 deductible, I can use that money for anything medical, but you have to have your doctor. I can't just go to CVS and buy aspirin. You have to have your doctor write a prescription for aspirin.
I don't think
so. Let's go through this. Two different things still. Mm-hmm. One is the insurance. The other is the right to go, and we're just going to make it simple, to your bank or your investment place and open up a medical IRA at the bank. It's really an HSA, but I'm trying to explain it in simple terms. So you go to the bank and you open up a medical IRA, which is an HSA, health savings account, and they give you a debit card. I can show you mine. All right. It's not a debit card. It's a debit card tied to that account. And it will say HSA on top of it. Okay. So I can use this anywhere to pay for any medical, dental, vision expenses, COBRA premiums, Medicare Part B premiums, and I can use it to pay for anything that Medicare, my insurance did not cover.
Can I mention something really important is that a lot of times these are done as payroll deductions, and they're put into the account for you, where that's possible with the employer. And what's really critical is that becomes non-taxable income.
Bingo.
And the money that you spend is also not taxable.
Correct.
So instead of you paying all these things out of after-tax money, you're paying it out of pre-tax money, and it could really make it does positively impact your taxable income for the year. The one thing to remember also is that you must expend the funds by the end of each calendar year. It's a use it or lose it. Isn't that right, Bill?
That's incorrect. That is not right.
Yeah.
All of the money you put into an account rolls over for the rest of your life.
Oh, great.
So let's pretend that Michael has a plan and it's just covering him, okay? And his wife is covered somewhere else. So he cannot put money into his medical IRA for his wife, medical HSA, but he can put money in for himself. But he's allowed to spend that money on anyone who's on his tax return for the rest of his life.
I did not know that. That's interesting.
It never goes away. You can also put it in retirement account. You can put it into mutual funds, investment accounts. And so a lot of my customers have put, now they have $30,000, $40,000, $50,000 in these accounts over the years. And so they're moving a large portion over into the investment side, and they're keeping $5,000 or $6,000 out for if something happens. But the next thing that comes into play when you have one of these is one more level up. Has anybody on this with us heard of a direct primary care doctor? Heard of a concierge doctor?
Isn't that like,
I pay a membership fee. and I go to the doctor. They give me their cell phone. They take me right away. I don't have to wait in line. And they then charge my insurance company and collect whatever they can from them. A direct primary care doctor has no insurance. They don't take any insurance. They don't file any insurance. I buy a membership with them, and they only allow so many hundreds of members to come to them. And that's it. I pay nothing to go to them for the rest of the year.
I know some people that do
So
that.
if I have an HSA that covers nothing till my deductible's met, and then go buy a membership with a direct primary care doctor, I can see a doctor. It doesn't matter. I pay nothing for that doctor anyway.
Interesting. Well,
So,
go ahead. Kat.
go ahead. No,
So
I
a lot of people
I know
buy
some people that do that. I know some people that do that, and they, in fact, I think one of Diana's people actually does, or she used to a long time ago. And I always found it interesting, or like I like how you explained it, because I never quite understood how it works. Back to the HSA, that we have that, and my husband's employer provides that, and I kind of have two questions about that. So when you're filling out those forms, I'm the one who's responsible for filling out these renewal forms every year for our family, even though it's my husband's employer. I'm the one that gets that fun task of filling all that stuff out. And every year you get this packet from the employer, and there's all these questions. And one of the things that I remember from the employer packet was, when you get to the HSA, they always used to, the employer used to input money there as well. And, but I remember you have to like estimate or something. And I always have trouble, like, as far as guidance, like what should my estimate be? You know, is there a formula? Is there a percentage? Is there I mean, I know I could go back and look, you know, at last year's numbers and kind of guess, but you have to guess kind of at what percentage of your income you want to put into that, because that's the tax deferred number. And for me, I'm always kind of like, you kind of have to forecast whether, you know, whether you're going to get sick or not, or how much medicine you're going to use. Do you have some sort of guidance for people when they're choosing that number for that HSA amount or that cap?
So let's assume that we've got a woman who's pregnant. And so we know we're going to have a claim. All right. And let's just assume that she's paid every week. And let's assume in your case, you were saying that the company's putting money in the plan for you. So let's pretend the company's putting $1,000 in there for you. Then what you would do is you would look and see, what is my maximum out of pocket? And let's just, again, make an assumption that your maximum out of pocket is $4,000. So you would back off 1,000 of that because the employer's putting it in, and you would say, I need to get $3,000 into this account. And the advantage of getting the money into the account is you don't have to pay taxes on that money. So let's forget about all of this for just 1 second and pretend you owe a hospital bill for $3,800.
Mm-hmm.
You have to pay $3,800 to the hospital. If you have a regular insurance plan, non-HSA, you've got to earn $5,000 in income, pay the tax on that $5,000 in income to have $3,800 left over. If you have an HSA, you can pay the $3,800 out of that tax deductible, non-taxable account, which makes it you saved $1,200 in taxes on that one $3,800 hospital bill because you had an HSA.
So bottom line is, it's a good idea. It is a good idea to have.
It does not always work.
Mm.
There's always a catch to everything. So let's pretend it's me and I'm taking a prescription. And right now the copay on that prescription is $100 a month. So I'm saying, yeah, give me an HSA. I'll take the $6,000 deductible plan and I'll take the HSA, because think, maybe my premium's even cheaper. But it turns out that $100 prescription with a copay is now $900 a month. Remember, nothing's covered until my deductible's met. So I've got to go 8 months at an additional $900 out of my pocket to cover my prescription to meet my deductible in the 8th month. And there's no way it's going to be better off for me.
Okay, so now I've got another question. A lot of things are changing in our country. And if the ACA goes away, what do you recommend? What are we going to do about health insurance, healthcare?
Well, let's say the election happened tomorrow. And let's just say the election happened tomorrow, or the court case happened tomorrow that's up there in the Supreme Court, and they said, golly, there's no more ACA. I can tell you, I've been to Washington 3 times now since Donald Trump was in office. I've met with people on both sides. I can tell you that no one is trying to take pre-existing conditions away, and nothing is going to change. Even if that law was struck down tomorrow, nothing's going to change for 2021.
Okay.
All right. You can't change this that quickly. Remember, the Affordable Care Act was signed into law in 2010. It didn't take effect till 2014 because this is a complicated mess. You can't tell all these insurance companies with 150 million customers change your rules tomorrow. It can't happen. Something's got to be done to address the affordable part about this. Okay. Something's got to be done. And I'm not exactly sure, and I don't want to be political at all at this particular point. I just don't think we need to be there today. But something needs to be done. I can see where people are making suggestions on both sides that in 35 years of my working in this field, I can tell you I haven't seen anything that works because I don't believe they're addressing some of the real problems. And to me, the real problem is nobody knows what the real price is. Ambetter gets a price that Blue Cross Blue Shield wish they could get. Okay. Medicaid pays even less than that. And so when you have a company like Ambetter who comes in and pays the Medicaid rate, no wonder they're cheaper than the Blue Cross and the United Healthcare, because they're not even allowed to participate in those rules. All of the doctors would tell them, forget it, we're not taking you. And so nobody's really on an even playing field. None of us really know what that prescription is. I have a customer, I have two women in one particular customer group that their prescriptions each are over $150,000 a year. I have a prescription that I was taking because I have an HSA. I went to go get this prescription at the local pharmacist and it was $800. So I called the doctor and I said, this is ridiculous. I mean, I have an HSA. I've got to pay the $800. Can we get something else? And they were like, no, I'll just send you a discount. So I got a discount program that I was able to go to Walgreens and my prescription cost $130. How could that be that my prescription could be $130 or $800? I want everybody to be treated the same. I don't care what color you are. I don't care if you're a man and a woman. And I want everybody's medical bill to be looked at the same. I know that Memorial should be able to charge more than St. Joseph's and Candler because they have the trauma unit and they've got to support that trauma unit. It doesn't come for free. So there will be some differences of what people can charge, but it still needs to be that we can see it. And if we're going to go everybody on Medicare for all, which I can tell you 100 reasons why I don't believe that will work, then it's also got to be an affordable reimbursement to keep the doctors and hospitals alive, because it's not an affordable reimbursement today. And people forget, if I've got Medicare and I'm taking the Medicare supplement for the Advantage plan through Humana or some other insurance company, it looks like I'm getting it for $30. And golly, I'm getting Medicare Part A for $130. So golly, I think it's a deal. They don't know that the government's paying Humana or Aetna $500 or $1,000 a month for their medical expenses. Mm-hmm. They think that's all the premium that's paid. So if you told me I want to be able to buy Medicare today from you, I'd say, great. Medicare for a person who hasn't paid in is $1,000 a month for Part A. Then it's almost another $1,000 a month for Part B. So great, you can buy into Medicare, and the real premium for the 55-year-old who didn't pay in till 65 yet, the real premium is about $1,100 a month. That's the real cost. People don't realize that because Medicare only pays 80% of the bill. You know, they wouldn't accept an insurance plan that let them have a $1 million claim that they have $100,000 to. And they look at a supplement as, well, that's all I've got to pay. No. That's what's on top of what the government's paying for you that you've paid in for the last 40 years. So there is no golly, we just moved to that, or let me buy it in early. Buy it in early. Come up with the real price. If they would show the real price, I don't care. That doesn't bother me.
Bill, is there something?
The real price. Nobody's talking about the real price.
Bill, is there something that we can do collectively as a small business community to lobby to make that happen?
I'm not sure, because the answers are too complicated. Everybody wants to be taught in a 15-second soundbite. And so it's like, oh, well, let's do this. Well, that sounds good. It has nothing to do with that. It's really where we need to be. If all of us got together in Savannah and created an association plan, what typically happens with an association plan is everybody jumps in, and as soon as the bill goes up, everybody who's healthy jump off. Mm-hmm. Now the sick people stay. Now the rates go up. Instead of 10%, now they're going up 15%. Well, then the other people jump off. And now the sickest ones are staying. And this is what happens with insurance companies. If you look at the price between Blue Cross Blue Shield or Humana or United Healthcare, they're basically going in an arch where they're kind of entertaining and trying to draw new people in, because new people in is what keeps that working better.
Did you say
something that happened to us? When I told you off before we got on here, I was telling you about how we were in California. My husband was insured by his employer with a widely known insurance company, And then we moved from California, and we had a certain rate, that we paid with, the employer paid some, we paid some.
Right.
Then we moved to North Carolina, and different state, same company, but different state. And so we moved to North Carolina, and the employer paid not as much, but still some. And, I expected our rate to go up a little bit. Our rate jumped to over $1,000 a month. And when I called and talked to the insurance company, and I'm like, wait a minute, we had insurance in California and it was this, and the percentage of employer input it was only a little bit of a difference. And now it's this crazy amount. And what they told me at the time, and this was a couple of years ago, they're like, well, California is a healthier state. And so statistically in North Carolina, you're going to pay more because statistically the state is less. And so your rates are higher in that state. Is there any weight to that, or were they just blowing smoke for me?
I think they're just blowing smoke, because in the big picture, it's the premium is the premium. And what the difference there is how much the employer is paying.
Mm-hmm.
I have a company, if you went to work for them, they pay 100% of your rates, 100%. So you're walking, your insurance is free. Again, let's just pretend it's you, okay? And so you leave and you say, I want to keep it. And when they say, great, the premiums are $625 a month, you'd say, what the heck happened? This is ridiculous.
Mm-hmm.
And that's what your employer was paying.
Mm-hmm.
And so the employee doesn't see what the employer is paying many times. And so it's called, in most cases, COBRA. You're paying $35 a week out of your check, or $150 a week for you and your spouse or whatever. And you say, golly, I've lost my job. I need to keep my insurance. And that $150 for you and your spouse per pay, hypothetically, is now going to $1,700.
Yeah, nobody ever, I don't know anybody that's ever been able to afford the COBRA side. Once you lose your job and you have that COBRA option, in my entire working career, I don't know one person that's been able to ever afford that.
Well, and see, we have a lot of people who take COBRA because they're in the middle of a procedure,
mm-hmm.
or they're able to have that doctor at Mayo, and the doctor that they could have with, hypothetically, Ambetter and Savannah, they can't go to that doctor. So a lot of people do not take COBRA. Absolutely. They call us, they say, can I buy something cheaper? Is there something else I can have? There's the temporary policies, the religious plans, the subsidized plans, but they can't even come close to affording the COBRA.
So Bill, we've got 3 minutes left. This hour flew by. There's so much information. I would like to see you start your own talk show on health insurance. I mean, there's just so much information here. Okay, so we got to wrap up. What is something you want people to take away from this? What direction? How can
the people who go on healthcare.gov by themselves and end up having problems, they've really got to find someone to help them. There's a lot of people out there like me who will help you maneuver through this, because it can come back to bite you. You should ask your agent or whoever you're dealing with, I would like to see all options. What do you show me? And when they say, we only show you this one option, they are not letting you see what everything else is. There's a lot of things out there now called limited medical. And here's the way to tell. I'm going to sell you a health insurance policy. And they say, oh, golly, this is great. It's not a problem at all. It's a real medical plan. Don't worry about it. And all you have to do is say, if this was back 2 years ago, would I be fined if I bought this policy? See, as of last year, you're not fined if you don't buy health insurance. And so now people are using things that, hey, you can buy this plan. It's called a limited medical, that, golly, if you end up at the hospital, yeah, you're going to owe something, but probably not, maybe not. And they're selling them as they're half the price, and they're selling them as though they're better. And they're usually gaps. And so I think when a person's only selling one plan, one policy, and you're not able to look at everything, you've got to ask questions.
You got a question here. Who should be individual policy?
I could name 10 or 12 agents. You can call my office. There's a gentleman here named Garrett who takes care of that. So if you call to ask for Garrett, he'll be glad to help you on the individual. You can ask for me and I can give you 99% of it. But Garrett can tell you, as of today, which doctors are in and which doctors aren't in, because the list changes all the time.
Is it more expensive to go through an agent?
It is not. It costs nothing unless that agent charges a fee. For my small virgin group employers who need to learn all of this, then we can look at that.
Mm-hmm.
Okay.
I've got somebody on here. Cobra was cheaper than Ambetter. All right, so let's look at a typical Cobra. Let's say that I'm 60 years old, okay, and the average age of an employee where I work is 40. So my rate is the same as a 40-year-old. So if I leave that job and I'm offered Cobra, let's say it's $480 a month. It's also a good plan, and it's also something I can keep my doctor. When I go to Ambetter and I don't qualify for a subsidy, remember my cost at 60 years old is $1,000. So Cobra, when you look at older people, could be cheaper than individual policies. You've got to look at everything. Plus, let's pretend it's us. Okay, it's Marjorie, it's you, it's me, and we held today, we have 3 kids. Okay. And I'm going to leave our job and we're going to lose our group health insurance. And we have 1 child who's being treated for a medical condition. We can Cobra just that 1 child and not Cobra the rest of the family.
Bill, you are a wealth of information. We know how to get in touch.
Stressed out but relieved all at the same time.
Yeah,
so much.
Each person needs to look at their situation, and as that changes, we need to review your stuff.
So if I want to come to you, say, and go, all right, Bill, I've got, my husband's employed. I'm a small business owner. He's got insurance. I don't, so I'm on his. But then we're looking at maybe doing some things, or maybe he's going to retire later, or maybe we want to talk about, there's all these policies out there now. Like you have your insurance, but you can buy catastrophic this or whatever. You have all these extra add-on things. Would you recommend that for just your average Joe person that's got all the boxes checked, that they review their total insurance package, like periodically, once a year, once every 3 years, what do you tell just regular people about that kind of stuff?
Most of it's education. For example, let's pretend that you're paying $150 a week for your entire family's health insurance, because you don't realize this. I mean, it still sounds like a lot of money. I mean, you're paying $600 out of your pocket and you're saying, oh my gosh, this is terrible. And you came to me and she said, hey, I've got a family of 4, maybe a family of 5, and we're paying this ungodly amount of $600 a month. Then I would be able to tell you, you're getting a deal. Go back and tell your husband to say, thank you to the employer. They're getting a deal, but they don't know they're getting a deal because they didn't know that if they'd gone to healthcare.gov, that premium was $2,100 a month. They had no idea. And so, yes, review it enough to learn that way you've got somebody to call. Hey, they're removing my rates up. Hey, they're changing my plan. Hey, I'm losing my doctor. You need somebody who's you're friends with. Most of our customers are our friends. When I was doing a birthday party I was going to do a really big one in July. I mean, we were inviting 500 people to come to my birthday party. So, the more people we have as customers, and there's thousands of them, I mean, most of them become friends. And that way they can call and say, hey, what about this? Everybody's welcome to call us.
Yeah.
We don't charge individuals for individuals. We have companies who pay us to go in to educate their employees about individual policies, and some don't, and we still do it. It depends on how much they want, what type of service they want.
Bill, we got to wrap up here. I certainly appreciate you taking this time this morning to educate all of us on what the world of health insurance. I mean, there's so much information. We put Bill's website there. Contact him. I'm sure he's happy to answer some questions. I'd love to do this once a year, or maybe once after the election, just get another update of what we need to know as small business owners or individuals.
And open enrollment again is going to start November 1st. Nothing is going to change nothing is going to change for 2021 as
Okay.
far as its open enrollment based on an election.
But it's also, you said, going up 25%.
Some companies are, some companies aren't. That's what I'm saying. This is where the problem. Some companies are having decreases and some companies are going up 25% or more.
So whatever happens as a result of this election, whatever side wins and whatever plan ends up in place, nothing's going to change for 2021. It's really 2022 and forward that will be impacted.
There might be changes coming in 2021 during the year. Nothing's going to change for January. Nothing's going to change for this open enrollment. Another administration could come in and say, hey, we're going to have more open enrollments. When this started, it was open for 6 months. It then got moved to 90 days. It's now 45 days. 100% of the individual people have 45 days. So just assume we have over a couple thousand. We have then individuals on Medicare and things like that. A couple thousand people have to be talked to in 45 days.
Oof. I could sit here and ask you questions all day.
1 hour is not long enough. So we got to say thank you. We got to say goodbye. I got to say, talk to y'all next week. But again, one more time, let me put Bill's information up there. And everybody, thank you for watching. Thank you for tuning into the water cooler. And we'll talk to y'all. We'll see y'all next